right, recording is live. We're live in the Discord. We got all the cool kids. So you guys can in fact see my screen. We good to go? Can you guys see VLCN? I see Ethan. I can't read all the names here real quick. Let me just run through these real fast. We got Kevin G, Palm Tree, Nemgain. Sorry, the names are like cut off. Infamy. I got to click on them all. Mac F Def. How you doing, buddy? 412542. All right, we got quite a few of you guys in here. I like it. Babnet, Zach. Good people. How's your morning? I said it would be, yeah, so that's going to start next week, potentially. So my mistake. I spoke about the wrong Thursday. Let's make educated purchases my copy trades. I'm trying to be a big dog today. Let's go. Well, I don't want anyone to copy trade because that means that you're not making your own confident decisions. That means you're relying on someone else. And my goal is to get you to the point where you don't have to rely on anyone else. So two important concepts today in that we're just not going to be holding things down anymore. We're not going to be doing the drawdown stuff. So I kind of talked about it on Tuesday afternoon in the lifetime section with those members. The audacity. Yeah, I mean, he's got a little symptom there, but yeah. So basically, the concept is very simple. We're just going to use one strategy going forward. It's going to be nice and clean, and that's going to rely on the price going this way and not this way. So if it goes sideways, I can also cut it because those are the only three directions the price can ever go. So normally, this has broken over, so this is something that I'd be jumping into. So I will be watching this one very, very closely. I'm just going to wait for a breakover on this one. And let's see. Yep, but actually, I'm just going to go ahead and jump in now. So it's a little bit of a higher entry. We're just going to go ahead and grab 442 plus 6%. It's a little bit of a risky one. 469 is going to be my sell target. Let me just draw a line here. 469. And we'll go ahead and set the sell order up. And we'll set a last price here. And then that way, if it pops up or down, we know exactly what to do with it. Now, the down range on this one is pretty, it's pretty sizable, but we just want the price to go up. So I don't want this candle to lose. If this candle loses, I'll just take the hit. It'll be a small hit. I don't have to worry too much about that. And then I still have my other trade for the day. Sorry, I got to keep an eye on the chat as well. So I'm like zipping back and forth here. JK, I did learn my lesson the other day. Yeah, don't copy trade, guys. Don't ever, me or anybody else. It doesn't matter who it is. Don't copy Nancy Pelosi's portfolio. Don't copy Warren Buffett. Don't copy Pookie. Just make your own decisions. And if you're not at the point where you can understand stuff or, make your own decisions like that, then just, it's kind of an indication that you probably shouldn't be trading a bunch, right? Because it's your hard-earned money. It's not mine. Fire TNER. I'm not sure how to pronounce that. Why no copy trading? I'm relatively new because copy trading doesn't work at the end of the day. Just fire. Okay. So basically, there's always going to be an inherent lag between someone else's brain and you're like them pushing a button, you getting that information, right? Because you have to watch, plus if you're on like social media, there might be a delay, right? And then you have to perceive that information, process it, and then figure out whether or not you can actually execute. And that's always going to be a point of friction. And then you have to actually execute. So you're always going to be lagging behind the person, no matter how slow the trade is. You're always going to be dealing with your own psychological obstacles as well. Hey, alarm clock. Speaking of psychological obstacles. And then you're also going to be dealing with different types of resources. Like they have a different portfolio. They have different goals. They have different risk tolerance. They have different decision making. And, maybe they can absorb a hit. Maybe you can't. Maybe you can and they can't. It's always going to be a push-pull situation, right? And if you, plus the information has to be complete. Like I share all my trades with you guys on this account, whether it's in free or whatever. So I'm just going to go ahead and sell. Oops, I sold a little low. That's okay. Don't really care. 3.01% for the day. I'm done. Just kidding. But yeah, just copy trading as a concept doesn't work, right? Like even if you automate it, right, you're still going to have some inefficiencies there. And that inefficiency is the gap we fall into, right? Because if that person ends up just barely breaking even and you're less efficient, you're going to be red, right? So you're going to see a lot of scams out there for copy trade this, copy trade that, this person's making XYZ in profit. But if they're not teaching you how to trade for yourself, as a side hustle, basically. And I'll cover that in a second here. But if they're not teaching you how to trade and make your own decisions and stuff, like why the hell would you give them money? Like at the end of the day, because they're just selling you data, and then you still struggle to use that data in a valuable way. So I'd rather just teach you guys how to trade. So I'm glad you're here, because no one else out there is going to tell you that, because they're trying to sell you stuff. We do offer paid stuff, but that's only when you're ready, and it's only to optimize. The foundation's always free, as far as I'm concerned. So you get to hop on streams like this and watch me do it live. That's a proof of concept, but I don't want anyone to copy me. This is just for demonstration. Zach, of course you're up 10%. Congrats, man. That's good stuff. I love it. Rollin 82 took that trade. Are you talking about this one here in BSLK? And were you able to justify the entry and analysis for yourself? Or did you just copy Pookie? Also, let me make sure I'm not muted on StreamYard. Okay. Okay, bull pumping nicely. Yeah, let's take a look. Don't really see much pump here. It's pretty low volume. I see the retrace though. It's a nice little push, pull, push situation there. Just needs a little more volume. That's all. So I like the setup here. It has to have volume, and it's got to have some structure break and things like that if you're into that. So we'll get our trade. Don't you worry. Now I don't want to just pile up and take a bunch of trades pre-market, because that my brain thought this said 1 million over here. The watermark in the background, VLCN. Zach was down on himself yesterday. I must have missed that one. I'm sorry. What happened there? And yeah, are you feeling okay? Money and portfolios aside, how you doing? So as a general rule, I try not to take 2 trades pre-market, because I only have 2 per day. I might do that today only because you guys are here and it's a nice active pre-market. But typically I try to take 1 before market open and 1 after market open. So I might stick to that. I'm just going to kind of watch the volume into auction cross, and we'll see how it goes. But typically at market open, I should just get 1 clean scalp or soon after. And then that's kind of the more confident trade. Roland says, I've been learning from watching and listening to you. Okay, cool. So you had a nice confident trade. You used an appropriate position size, and you prioritize getting out of the trade. In this case, it happened to be for a profit. And that profit was larger than the loss would have been. I assume all those boxes are checked. And there's no wrong answer. So if not, we can absolutely have that in the chat. But that's the goal. I want to make sure you guys all get to that point. Zach says it went down $300. You just beat yourself up a little bit and didn't hold it long enough. Okay. You protected your downside. Yeah. So if you want to walk through that trade, we can do that. You had a set of data in the moment. Then you had data that you didn't have access to after the fact. So you protected your downside. You managed your risk professionally, and that's what makes you a successful trader. So let's figure out where that self blame is coming from. Because when I protect my downside, we're supposed to feel good, right? Because you did the right thing. You did the thing that's going to keep you in the game. But that's not to say you're not human, and we all like to see profit. So we can also chat about that. So for this one right here, again, I'm not trading this, but this right here would have just been a very small entry right above the break of that guy. And then I don't like drawing the stop loss in these pre-market ones, so I'm just going to draw a horizontal line. And then 446 here plus 6% would be 473. So let me just move this up to here. Now, again, this is not a copy trade. Please don't trade this. I'm just drawing lines just to demonstrate in real time. I'm only taking 1 trade pre-market, 1 trade after market opens. And then that would be the hard cut point. Now, this is a pretty big risk range. So this is an opportunity where we'd be able to use something like the 1% rule, for example, just to protect us in case we get outvoted, right? The thesis here is that the price should go up, and we bought it when it was going up, we would have bought it when it was going up. I'm not actually buying it on this account. So now it shouldn't be going down, right? So if it goes down, I don't want to be in that trade. That's the whole concept here. Is I want to be in the I want to be in the stock when it's going the direction it's going to make me money, and I want to be out when it stops doing that. So, and yeah, stop losses don't work pre-market because they're based on market price, and market price doesn't update until after 9:30 a.m. Eastern. Otherwise, I'd use them if I was a new trader, yeah. But I, you know, I've been doing this for a decade and a half, so it's easier for me to just use my hotkeys. So I've got these hotkeys set up here. Actually, I got to change this to a. There we go. So I changed my second buy to 48%, and that's just because I don't want to hit the threshold where it's like, oh yeah, insufficient funds, blah blah. Because if you try to use a perfect 50 and 50, Webull sometimes throws a fit. So I do 50 and then I do 48%. Because I use it to restrain myself from selling and buying. Yeah, and that's, you know, if you're a newer trader or if you're a little bit less disciplined or maybe you're still working on execution for any reason, the automation really helps you with that execution because it takes a lot of your decision-making capability out of your hands, right? And that's always the thing that gets in the way. It's us. It's not the market. It's going to go up or down, right? All we got to do is figure out if we're supposed to be in or not, and then just get out when it doesn't make sense. That's your number one priority. So again, this one, you know, BSLK, again, I'm not in this trade. This was not a trade. So it would have moved down below the stop loss, and then that would have just been a small loss on that one if we did. So again, 2.85% loss or a 1% loss if we use the 1% rule. And then we don't have to worry about it. This one here showing some promise. It's got to break over here. It's got to get volume. But again, I'm not trading anything until after market open. But this is the kind of setup that I like. And then in this case, I'd keep the stop nice and tight somewhere around here. And then you got plenty of room here to the upside. You've got a wick rejection there. You've got a stop to that right there. But it needs volume. So this isn't one I'd be jumping into. I'm just showing you guys very basic shapes and colors. So we'll come back to that one. And then this one here is probably going to fall off at market open. We don't know that, but I think that probably BSLK might get some attention. Now what I'm looking for is disproportionate volume and market cap here. So I'd like to see, like BSLK, for example, it's got 4.5 million market cap, and it's obviously up pre-market, but its volume is 4 times that. So that's kind of what I like to look for, just as an initial pass to the sniff test. So this one here is about to open. We got about 45 seconds to market up. Let me just erase all my lines. So when the market opens and I see the surge that I'm looking for, I'm just going to hold the control key and I'm going to press 9. That's going to place a buy order at the last price, and it's going to automatically set a take profit at 6%. So I got about 30 seconds. Don't know which ticker I'm going to trade yet, but it's probably going to be one of these two. Now, I don't really like VLCN until it gets that volume, but I do like that it's a super low float. So we'll see which way that goes. And if I want to be super conservative about it, I also have a hotkey set up where I have a stop loss implemented as well. So it'll place a stop loss and a take profit, and then I can move those into place. So we'll just watch the volume. We'll see how it goes at market open, and we'll see which way things go. All right, market is open. So I'm going to change this over to 1 day, and we're just going to go ahead and watch some things. Actually, I'm going to switch this back to, let me switch this over to pre-market, only because Webull likes to be weird. Ooh, I kind of like that. So it's starting to get some volume here, but we got to go ahead and give it a second. I kind of like this one. Now, this is one I probably would have traded. I might still trade it, but I got to see that volume persist, right? We don't want to see that happen. The volume is wild as usual. For the low float trash stuff, yeah. That's what these are. Like, these are not long-term investments. These are just quick scalps. I'm just trading the volume. It's just my preference. I want to go ahead and get in there. Oh, insufficient fund. See, every time. Well, we're going to go ahead and wait a second. I want to see a little bit more volume. So it's a good thing we didn't get in. Just want to see a break at this point. So right now, we have a range established, and I want to see that range break before I get in. So Just going to hang out for a second. If it goes down, I don't want to get in. If it goes up, I want to get in pretty quickly. Let me just peek over here real quick. BSFK selling off. Yeah, so a lot of these are just kind of pulling back at market open, and I don't want to fight with those. So let me switch this back to the 1 day. Okay, so you can see like the top gainer here is negative 19%. So we don't like that. So I just got to wait for the, there we go. It's like sometimes the top gainer widget just needs to catch up. So basically what's happening now is there's just a push and a pull in the market. We're waiting for that early conversation, that argument to kind of resolve itself and pick a direction. Then we can get in. So I like what I'm seeing here. We got the heartbeat that we like, right? Everybody here knows the heartbeat. We look for this, and then we look for a stall and then a break. Okay, so we'll see if we can get that in real time. Otherwise, I'll be looking at the other stuff. WINT. Yeah, we made a bunch of money on this one. And then DPRO. I don't see that one on the list here. It's down here. Ooh, I do like that. Just peek here. It's kind of running into some chop here, and there was like no volume pre-market. We'll come back to that one, maybe. Actually, yeah, I kind of like it. I'm looking, Tammy. You got me intrigued here. I always confuse this one with DFLI. Oh, actually, hang on just a second, Tammy. Here we saw some shimmying in the price action on this one. I want to see if this is going to break out. We got a double harami forming. So go ahead and move these lines a little bit here, and we'll see what happens in the next couple seconds. We get a nice break to the upside on this one. This could be our kind of one and done for the market hours. Or it can go down and we just don't trade it. Could go either way. Yep. That's cool. That means we don't have to look at that one too much. WINT is definitely getting some juice. I don't know. This one's great as long as the volume's there. So maybe I'll wait for a little pullback on this one, and then we'll look for a continuation. This one is just a little bit scary. So good opportunity though. And this one likes to run, hundreds of % as well. And then DPRO, that's also pushing. Amy, what are you doing to me? Do I ever short? Yeah, I can't short on a cash account. I have this small cash account there. And since you can't, there's no leverage, you can't borrow, you can't short sell. Yeah, I think I'm going to wait for a pullback on this one. I like this one. I've traded this one. You guys have watched me trade this one. But the key for this one, as you probably have seen, is to get out immediately. So the LCN halted to the downside. Yeah, that makes sense. That's why we don't trade those when they break to the downside. So that's a double harami. So that means that 2 or more candles in a row had inside candles. And then this one happened to break to the downside. So we don't like to trade those. Is WINT just not going to pull back? Tammy, are you just constantly buying this one so it blasts? Is that what you're doing? Chris, yeah, you got in. See, you took a little risky entry there. I like it. I like it. I hope you had a nice tight stop loss. And Zach is in. Yeah, you guys are animals. I love it. Now, if I take it, it's going to slam down. So if you guys are in it, let me know. Just kidding. I'm just going to wait for a little pullback. I don't want to have I'm not looking for a super deep retrace or anything. Yeah, it does calm down fast. That's a great way to word that. As soon as that volume falls off, it's game over. It becomes a game of hot potato. But there's a grenade. Oh, I like this one too. There's too many good choices this morning. Scary. Zach, tell us when you're selling so we can prepare for the pullback. Yeah, just a small position of $6 million. And again, if I'm a new trader, right, and I'm trading on my own and I'm not Pookie live streaming for you guys, and I hit my 3% daily goal, which I did, I'd be done for the day. This should be a side hustle, not a lifestyle, right? And that's counter to everything you see on YouTube and everything you see on social media. It's just every trading guru out there is like, oh, I stare at the charts for 9 hours a day. It's like, cool, but why? Right? This stuff compounds stupidly efficiently if you just manage your risk well. Ooh, looking at this one for I like it for a bounce. Don't know if I like it for 6%, but I like it for a bounce. A nice little fat area here. I just don't like it because it already pulled out of here. I gotta see a break out of this zone, right? Because we were already here, right? It broke out of this zone right here, and then it immediately got sold back down. So it's worth watching. This one's worth watching. Now we got our 3 of 5 here, right? Lifetimers. I feel like scalping should be a side hustle. Investing for retiring, it just makes you stop working early. Absolutely. So all we do, right? If we want to trade speculation, then we can put. Why is it saying I have insufficient funds? What is going on here? I'll just put like $80 in here. Maybe that might be too much. Yeah, I need that. What is going on in my account, guys? It's weird. Let's hang on a second. Okay, so there's the heartbeat in the stall and the break. Weeble, what is your problem, buddy? Give me 1 second, guys. I gotta look into something. I think Weeble's just glitched. That's the first. Oh, because I didn't check that probably. All right, well, that's weird. I don't like Weeble, guys. We'll see what happens here. I think it's because I didn't have that box checked, and that's okay. I say I should have like $80 because I used half and half. So let's hang on a second. BTOG. What do you like about that one? If it gets volume, yeah. I mean, you get your 5 candle setting up. It could be good. Yeah. It needs that volume to pick back up. So you've got your 5 candle, you've got descending volume, right? So when it catches that reversal, for short-term pop, then yeah, stuff like this is great. I just don't want to try to time the bottom. That's dangerous stuff. Jimia. It doesn't have the volume. Right? We like Jimia for a swing, getting in and out, right? Not just buying and holding, because that can hurt you pretty bad on some of these. But we like it for that. It doesn't have the volume I like. Watching this one pretty closely though, WINT. Yeah, I'm sure there are bag holders on that. That one grabbed a lot of souls, unfortunately. Oh yeah. So basically, yeah, I mean, that's what we do, right? If if I'm an investor, I'm gonna get ready to buy this here. If I see another pop up, yeah, I'm gonna go ahead and grab some if I can get filled. All right, so I got filled on WINT at 153. I got my sell order at 162. I'm gonna let that cook, and I'm gonna read the chat. So yeah, so personally, what I like to do is make consistent contributions, or this is kind of how I built my stuff. Just make consistent contributions, and then putting 70% of that into passive income, right? And then 30% is used for speculation if I want to. Could be 80% and 20%, could be 90%, 10%, or 100% and no percent if you don't want to speculate, or if you can't look at charts or any of that stuff, or if you just don't feel like it. And then if you do speculate, any of those profits get trimmed to keep the account in a nice familiar range, and then just shoveled over into the investment stuff. OPED, unfortunately, I'm already in this trade. Sorry. Let me actually draw my line here at 162 as well, and then I'll cancel this, and then we can shop around a little bit. So OPED, let's take a look. Yeah, I got a nice little pop of volume. This is good. What's the is that like 20? Wow, 23 million float stock acting like that on that low volume. What's the spread? Yeah, it's a 15-point spread on the bid ask. So I like it, but it's scary. All right, so let's see if this one's going to pop off. But yeah, and then basically what that does is it allows the passive income to compound, and then you reinvest those like passive profits. Like you can rotate them based on sectors. You can let the dividends reinvest. You could do all kinds of stuff. It just kind of depends on you as a trader. Does that make sense? A trade a day keeps the inflation away. Yeah. So if I just get a small portion of my money, and then I compound that at 3% per day, there's 250 trading sessions in a year. Doesn't really matter what number I start with. It's going to be obnoxious by the time I'm done. In most cases, I have to uncheck this as well. So we hit our target. I'm just going to wait for a little bit more of an aggressive push over it just so I can sell most of the shares, right? Just kidding. I'm going to sell them all as soon as it. So there's the heartbeat. There's the stall. Another heartbeat. There's a stall. You guys see that? The timing. So we're just waiting for one stall and then for it to pop over that. Let me zoom in so it looks nice and dramatic too. Hang on. So you guys see that heartbeat that it's doing right there? It's just kind of slamming into this roof and then it stalls up here every now and then. As soon as one of those breaks over, that's the breakout. And that's when you get those nice pops. So this is actually a perfect example because it's staying within two limits there. And I'm just going to hold control here so I can push the button when it's time. But this is like a perfect example. And then if it breaks below this candle, I'll just get out. Boop, out. No hesitation. Right? Smaller profit than we would have liked, but that's okay. I probably wouldn't have gotten filled at 162. I didn't see too many fills coming in there, but we're up almost 4% for the day. Not a hard day ever, and we're in and out. We hit our 3% target. Followed my trading plan from start to finish. We didn't have any drawdown, which is what I called out at the beginning of the stream. We're not going to be doing that anymore because it tends to have a little bit too much influence on you guys. So I just don't want to do that to you anymore. I'll do that on my own accounts and stuff off screen. If I've got some free time, do I mind explaining the trade idea? Yeah, so pretty much in these streams, I just scalp volume, right? That's all I'm looking for. And it's a pretty simple concept, right? And simple isn't always easy, so don't feel like I hope nobody feels like I'm talking down to them when I say that. It's not easy, but it is very simple. Give me 1 second. Okay, so we've got a level, right? Regardless of what my reasons are for plotting whatever level, right? I've got a level. And all I want to do is wait until the price breaks over that level and then get in, right? And the reason I want to wait until it breaks over is because at that point, as it's breaking over, that satisfies one of my main criteria in that I have to wait for the price to be going in the direction it's going to make me money. Does that concept make sense? Just a 1 in the chat if that makes sense, and then 2 if that's confusing or maybe if you're like too new. So okay, so you said yes, trend following, momentum following. But yeah, those are great ways to explain it. That's all you're doing. You're making sure the price is going the direction it's going to make you money. What's up, Pirate? You're new. You're gently used. Yeah, that's because it makes sense, right? If your goal is to make money in the market and your participation has to be in a certain way in order for that to happen, getting in is critical because you want to be doing that when the money is to be made, right? Not when it's to be lost. So in that case, as soon as this hits, right? As soon as it crosses over, we can enter. Before this, we should have done all the analysis. We should have identified exactly where we want to cut, where we want to take profits, and blah, 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 right? We shouldn't be making that decision when we're in the trade because that's when we're the least reliable in terms of decision-making and calm-headedness. So all we're doing is pushing a button. We're going through the motion when it's time to go through the motion for this specific point in time, okay? And as soon as that starts, all right, as soon as this point in time occurs, the X and the Y match up and you push the button, timer starts, okay? And while that timer is active, think of it like a game show, right? They push a buzzer, some music comes on, you start like you have to do something, right? Your brain wants to do everything it can to escape the discomfort of not knowing the end result. So your job is to combat that with objective reasoning and relying on your trading plan. You don't need to trust yourself. You need to trust whatever edge you've developed and proven to yourself with data that it will work. Even if it's a losing trade, your job is to get out of the market if you're a scalper. So if your job dictates that you exit the market or get out from underneath that risk, you've got 2 points to do that. And then you've got a third over here, which is just time, right? If it's the end of the day, for example, and you meant this to be a day trade, you shouldn't be in that trade at the end of the day. Okay. So you've got 1 and 2, and then you've got a third point of action. Does that make sense? all three of these, the end result is exactly the same in terms of the action that you take. You just got to get out of the market, right? So anything up here is extra risk. It's unhealthy risk because it's not what you meant to do. Well, down here, right? So these are the no-no zones, right? And each of these zones has its own little set of excuses, right? Like up here, it's like, I left profit on the table. I got to blame myself. Over here, it's like, I should have held this longer the last time because it made a profit the next day. You know, I gotta compromise, right? Down here, it's like, I always get liquidity swept. It dips below my stop loss and then it blasts, right? It doesn't always happen. You just happen to remember sometimes when it did, and they have more weight, right, in your brain. So this is where you get in. This or this is where you get out, right? It's either going to go up, down, or sideways. And then anytime that you're down in one of these boxes or over here or up here in this box, this is a deviation, okay? Because if you're in the box, nothing can really happen unless you make it happen. So if you're taking your profit right here, okay, that's a deviation as well, because that means that you didn't trust your setup, you didn't trust the edge, not necessarily yourself, and you got in the way because your original analysis that you did over here dictated that you were only going to take action up here, down here, at the end of the day, okay? So all of a sudden, because you have new information, which happened after you made a decision and took an action, then you start making different decisions, and that's your brain just getting in the way. It's a little, it's a dopamine-seeking part of your brain. The nucleus accumbens wants resolution. It wants closure, right? We don't like open loops. So it's going to get in the way. It's going to lie to you. It's going to say, hey, you were wrong. You know, it's like a little drug addict. Like it literally is. It's a drug addict. So your job is to kind of silence that voice and say, hey, instead of breaking into houses and stealing copper pipes, let's go into the next house. And there's these beautiful copper bars. You just have to get one at a time and wait for them, right? That's the goal. But if you're just impulsive and you don't put any effort into becoming aware of that and then mitigating that, it's going to control your trading. You're going to have a very hard time in the market. It's going to be stressful. And you're probably going to wash out like 90% of other new traders. Okay, so I don't want that to happen, which is why I'm taking the time to explain this to you guys. So any trade setup should be the same exact concept. It should be waiting until you should have some analysis. You should have an area of potential value with a defined minimal risk range and a disproportionately larger profit range. Okay, I want everyone to think about that. Rewatch this, write that down. Because it doesn't matter at the end of the day, all strategies should give you those three criteria no matter what. Right. So if you're going into a trade saying, I'm just going to wing it with the profits, or I'm going to wing it with the stop loss, and you just kind of go with the flow, you are hurting yourself. You're lying to yourself about doing so. So when you get in, regardless of the strategy you used, you know exactly where to get out in all three directions, and the chart has to hit one of those three directions. Okay. At that point, it's Boolean. You're either going to hit one of those levels or you're not, right? Before you take an action. So your very next action is going to be the result of you hitting one of these or not. Okay. And if you follow that plan and you take action at or near these levels, like you're supposed to, and when I say near, I mean slightly above, like I might take a profit slightly over my level. If that's the case, that's okay. But if I'm doing it like here, or because it maybe came 1 cent from my target and now I see it coming back down, that's not appropriate because you're just deviating based on new information. So in reality, what I like to do, and I've done this on a bunch of streams, is I like to cover the chart. I open Notepad and I just put it over the chart, and it drives you guys crazy. But some people, it actually helps because you don't have that extra information to influence your decision making. So if you're having a hard time in the market, try that. See if it works out. Because if you got bracket orders in place, they're going to handle it. You don't have to worry about all that. You're either going to have one of the two end results that you already accepted when you push the button and entered the trade, right? You already accepted the take profit. You already accepted the stop loss as two potential outcomes. But all of a sudden, because you saw this potential and then you see this, that's no longer acceptable. That's your brain getting in the way. Okay. So I don't want to lecture too much. But that's kind of the key message there. And then the reason we stop out, like if we looked at this trade right here, for example, we stopped out. I don't remember exactly what the price was on that. Let me just grab that. 156. Yeah, so I had a small profit on this one. It just looks ugly because it puts like the S down here and the candle wasn't done. But this is where I sold. So I made a small profit on that one. But The reason we want to cut that position when it's no longer going the direction we want it to make money is because all this extra stuff, right? This extra noise down here, this extra price range, this is stress, right? And this is going to carry forward to the next trade. It's going to attach itself like a little sucker fish. It's just going to be like stuck on the side of that trade, influencing your decisions. Okay. JWAG says no-no zones. I got to understand that better. How do I figure out what my no-no zones are? So basically, if you have a take profit, anything above that is a deviation from your plan to take profit at that level, right? If you have a stop loss, anything below that is the deviation from your plan to exit the trade for a small loss. So you've deviated if you're in that zone. If you meant for a day trade to be a day trade and you're in it the next day or after hours or something like that, and you've compromised, or maybe you didn't want to hold it past lunch and it's 2 o'clock in the afternoon, you've deviated. So that's your no-no zones. Does that make sense? Charlie, so often the B and S bubbles on my chart make it look like I traded like, yeah, it's just the way that Webull is. And it's an intentional design. Every single decision that they make is intentional. And this is to get in your head because they want you to say, oh, you remember the slightly profitable trade? Turns out you actually it looks like garbage. You did a really bad job. Like they put the S at the bottom for a reason. They put the B at the top for a reason because they want to compel you to continue trading because they make money off of your frequency of trade. That's how they harvest their money. Those fees, small fees. They're insignificant for you and I, but they add up across millions of traders, and then the high frequency algos and things like that. So they make their money. It's psychological warfare. Yeah, exactly. You know, your bank does the same thing. The housing industry does the same thing. Healthcare does the same thing. A lot of industries just do the same things. It's just business psychology. Hell, I do the same thing on you guys all the time. But I do it in an ethical way. So I only put things in front of you that make sense to you. That's why you don't hear like BS sales gimmicks out of me. And I always say there's no pressure to buy stuff because I don't want anyone to feel like they have to buy something to be successful because the foundation is free, but it might take you 2 or 3 years of hearing me ramble about stuff for it to finally click and then be like, oh, wow, I was drowning in shallow water because I just didn't pay attention. Or, maybe you tried to optimize before you tried to stabilize, and step one is always cutting the bleeding. You have to stop the bleeding first. Ooh, I like this. I like it. All right, so there's a break over our original level here. So this is an opportunity. I'm not going to trade this, obviously. I'm done trading for the day on this account. But this would be a good demonstration opportunity for why the 1% rule can kind of be our best friend. So let me move this over here. Now, this is obviously a sizable risk. So I'm not trading this. Just bear with me here while I explain something. All right. So that's a 25.82% profit range and an 8.61% risk range. So who here wants to take an 8.6% loss? And this would have been a loss in that case because I took forever to draw it. The nuked account says, me. I don't know, man. I don't know. Doesn't feel good. No 8s for gains only. All right, good stuff, Charlie. I like that. So in this case, if just pretend this was a different setup and pretend we got a different end result, who here would rather turn that 8.61% into 1% if it was going to be a loss and then still take 3 times that in profits? Duco took 10% today. What did you trade, sir? Fire says sounds better, right? JOA, yes, Charlie, yes. So we're getting a lot of support here. All right. So who here is not, okay, let me ask that in a better way. If you're familiar with the 1% rule and comfortable with it and you can do it efficiently, put a 1 in the chat. If you're confused, never heard of it, or still struggling to learn it, put a 2 in the chat. I'll teach you guys stuff. Death Gun, yeah, I know you got it locked down. Extremely uncomfortable. Is it because it's math? I feel like it's because it's math. 2 and feeling guilty about it. Well, where's that guilt coming from? This is a blame-free zone. But it's good that you mentioned that. Mr. Knight says 2. How you been, by the way, man? I haven't seen you in a while. I'm glad you're here, buddy. If I remember correctly, was your name Adam? That's going to bother me. That's really going to bother me. Thomas. Okay. Okay. Yeah. Either way, I'm glad you're here. It's been a bit since I've recognized your name. So if you've been on my streams, I apologize. I haven't recognized you for a while. So I'm glad you're here. Fire says 2. I know it, but never really understood it properly. Okay. Oh, it's been a while. Okay. I just want to make sure I didn't misremember. Charlie says I should have drilled it and know it through and through by now, but I've not put in the time on myself. That's okay. That's I've missed you too, buddy. Have you seen the recordings? Are you on late at night or just whenever you can? But you're here now. That's what matters. Yeah, definitely follow up with Nikki, man. It's been a little bit. So, all right. So the 1% rule basically just allows us to have a greater than 1% risk range without taking a greater than 1% loss. Okay. So the way we do that, and let me just erase all these lines, right, is if I've got a level and I've got my stop loss and I've got my take profit, which is disproportionately larger, then this risk range right here needs to be 1% or greater for me to apply this. Otherwise, I could full port and still not take a 1% loss logically. Because if the risk range is only 0.5% and I full port, then I can only lose 0.5% as long as I maintain my stop loss. So for the 1% rule, basically, we just need to figure out how many times. Well, let's do it step by step, right? Let me just open Notepad here. And I just got to do it over here because it's got some private information on there for membership stuff. So I can't put that on a live stream, unfortunately. All right. So step 1 is going to be to determine 1% risk. Okay. And that's your portfolio amount. So in this case, I have 179.04. So I would just move the decimal 2 points, right? So mine would be $1.79, and I would just cut off the last 2 digits. Okay. Does everybody know how to do that? Just a super quick one in the chat if you do. 2% if you're not sure how percentages work. And I'm not asking that in a condescending way. I just know that not everybody knows that stuff. And I was in the Army, like there were a lot of kids that just didn't know how to throw a ball. That's just because they weren't shown, and that's easy. That's easy to fix. All right. So a couple of you guys are putting ones in there pretty quickly. That's good. All right. Cool. All right. So if our job is to make sure that any one trade doesn't lose more than 1% of our portfolio, we need to obviously know what that 1% is, right? Then our next step is determine the risk range of the trade, the setup risk range, right? So let's just say we've got a 4%, just a flat 4%, right? Now I need to bring that 4% down to 1%, okay? And what do you think the best way to do that is, right? Given that I'm trying to figure out how many times this loss can go into my portfolio as a loss to meet or not exceed that $1.79 risk range. All right, and let's say that 4% is equal to maybe 25 cents in price in dollars, right? So I need to take how many 25-cent losses before I come close to $1.79 as a total loss? I can divide, right? So 179 divided by 25 cents is 7, right? Does that make sense? Just 4 quarters and then 3 quarters is the $1.75. All right. Now there's a shortcut here. So they always round down, obviously, but this would tell me I would need to buy 7 shares. So if I'm putting in a quantity of shares, I would just do 7 shares, and I would use this method. If I wanted to just use a little shortcut here, I know that it's 4%, so I could just divide my portfolio amount by 4. Okay. So 179.04 divided by 4 is going to be about 7 and then change, right? Let's just for proof of concept here. 179.04 divided by 7, it's 25.577. Now, of course, that would be the dollar amount that I commit. So let me just 25.58. Well, we'll do 25.57, right? And then, so this is the number of dollars that I would need to commit to shares, to 7 shares. And then I can just multiply this out to achieve a 25-cent loss. Sorry. In order to meet that $1.79 threshold of my max loss for the day, or for that trade, right? So roughly a quarter of the portfolio, and that doesn't make sense. 179.04 divided by 4. Yeah, 44.76. So that's a little low. It's Thursday morning math with Pookie. It's not good. Not good. Yeah, so 44.76 would be the number of dollars that I put into a trade. And that also means that I've got 3/4 of this portfolio left on the side, right? Because I've used 25% of it for this trade because I'm dividing by 4. Does that concept make sense? And like, does everyone understand why we're taking 25-cent losses and figuring out how many of those are equal to 1% of the portfolio? It's a couple extra steps, but these are two different options too. You don't have to do both of these. You just have to pick one of these. Okay. Basically, I like to just look at the dollar amount, or actually no, I like to use the percentages. I think faster. So let's just use the percentage, right? So if we're just using a 4% risk range, I would use 1/4 of my account, which is 44 or 45 bucks, right? Just as a quick ballpark. If it was a 5% risk range on the chart over here, like this range between the entry and stop loss, if that was 5%, I would use 1/5 of my account, which is 90 bucks, right? Or what would that be? 179, 4 divided by 5, 35 bucks. I don't know why I went up. Should have gone down. And that just tells me how many dollars I need to commit. So I would just go to the dollar quantity and I would push the button and it would just buy however many shares that $35 could afford. Okay, so I can let Webull do all the math for me. I just divide whatever my total portfolio is by the number of percents in the risk range. So if it's a 17% risk range, for example, 179.04 divided by 17, I would put $10.53 into that trade. Does that part make sense? Sorry, I think showing the two different approaches kind of made it a little confusing. Fire says, so you set it up so that if you take this stop loss, you lose 1% of the total capital. Yes. Yes, that's exactly what we're doing. We're just making sure that regardless of what the risk range is on the chart, that it's still just a 1% overall loss maximum. And then since we're using a disproportionate risk reward ratio, the profit is automatically going to be 2% or 3% or 5%, depending on what your ratio is. It's always going to be a fixed percentage overall, and that's going to compound to the upside, net positive, as long as you, and I've demonstrated this a million times. I don't want to waste everyone's time here. As long as you are consistent and efficient, there's going to be little slippages here and there, and that's okay. But if you win like 3 or more trades, you're net profitable. If you over 10 trades, if you lose 10 trades in a row, your max loss will be 9% or just over 9%, not 10% because it compounds and diminishes, but it'll be about 9%. And then if you, or 9.5%, sorry. And if you win all 10 trades with a 3% ratio or a 1 to 3 ratio, you'd be up about 39.59%. Sorry, I had to do some math there in my brain, Jesus. So let's start with $100, right? Plus 3%, plus 3%, plus 3%, plus 3%, 3%. Plus 3%. Sorry, I lost track of the numbers there. 3%. There we go. Or somewhere around there, like 38, 39 bucks. So you're actually getting almost an extra 10% just because of the compounding effect over 10 trades, and that compounding effect is working in your favor by minimizing the losses to the downside. So if you take 10 losses, 1%, you're not losing 10%, you're losing 9.5%. If you gain 3% 10 times, you're not getting 30%, you're getting 39%. So that's why we like this specific rule. Now it's a little bit extra math, but if you know your risk range, just like if you're a sniper, you're going to lay out your range card. You're going to know exactly how far away certain things are before it's time to take that shot. You're going to know where you're going to land, basically based on the risk range. So you know that you're not going to take a 1% risk range unless you're full boarding. So you know that you can calculate 2%. You can calculate 3%, 4%, 5%, oops, 6%, 7%, 8%, all the way up to 10% if you want, in terms of drawdown ranges, right? So let's say this is 2%, 3%, 4%, 5%, 6%, 7%, 8%, 9%, 10%, right? Now these are not accurate, right? Because I'm just kind of drawing lines here. But you could have all these numbers pre-calculated, and you can say, okay, well, if this is my entry, maybe I buy, this 2%, right? I'd do half my portfolio. So I'd do $80, which I can also then calculate the number of shares that I would need to buy. Right. And then I can go to the next one and I can move this down and say, okay, well, it's a third of my portfolio now. So let's do $60, right? Roughly. I don't know what the exact numbers are. And then so on and so forth, so that whenever it's time to enter here, right, you've got a risk range that's established, and you know exactly how many shares you need to buy based on that specific risk range, right? And you can do all this ahead of time if you want. It's better to practice this in the higher time frame, so you have plenty of time. But the concept is there, and eventually you'll get so familiar with your account because it's going to be in the same range because you're trimming those profits and putting them into passive income, that these numbers kind of come automatically based on where you get a rough range, right? It's never going to be perfect. But getting comfortable with the 1% rule is an insanely valuable step that any trader can take with the right practice, if that makes, or the right mindset, right? So again, I don't want to lecture you guys too much, but hopefully you guys see the value in that. So let's look at the 15-minute strategy here. Obviously, I'm not looking at any options on this account just yet, but doesn't mean we can't look at them, right? So for this strategy, I don't see anything that would have broken out of that range yet with a confirmation. Doesn't mean there's not, sorry, directional traded open. Obviously, there's puts and then there's calls. And if you keep those risks nice and tight, you can trade those as well. But this account's too small to trade options on for Tesla. But so really quick, after that long, exhausting conversation, that lecture, the math lecture, does the purpose of the 1% rule make more sense? Or is it a little bit clearer? J-Bag says, yes, it makes sense. All right. Fire says, yeah. Mr. Knight says, yep. All right. Good stuff. So what I would like everyone to do, just practice. Just start with, let's assume that we have $1,000 in a portfolio. 1% is what? Right? Let's go step by step here. It's going to be $10, right? So you don't want to lose more than $10 on any trade that you take on that $1,000 account. So if my risk range is 6%, how many dollars would I commit to make sure that I don't lose more than $10? It's a little complicated, right? So let's walk through it. So we got $1,000. Max loss is $10, which is 1%. Oh, Duco, 220. Okay. So sorry. So we're just practicing here really fast. So we start with $1,000, right? That's our portfolio size for this account, just for this experiment, just so we're all using the same number, right? Which means your max loss is $10. Okay. Yeah, it'd have to be less than a fifth if it's a sixth. So it's a thing. But yeah, you're on the right track. It's around 200. So if I don't want to lose more than $10 and my risk range is 6% on the chart, that tells me that I need to use 1/6 of the $1,000. Does that make sense? So I just divide 1 by 6 and then I multiply to get $1,000 divided by 6. That tells me 166.67 would be my position size. Okay, and then based on the entry price, that tells me how many shares I have to buy. But I don't have that information, right? Because I'm just making up numbers at this point. Okay. So if you're a swing trader, this is your bread and butter, and you got plenty of time to figure all this stuff out. Like as you're laying out your watch list and putting your levels on there and doing your analysis, you can very easily do the 1% rule. Charlie says the entry money you have to put to a trade is the 166.67. Yes. So the cool part about this also, right? Yeah, that's your max position size, your max commitment. Yep. So the cool part is that we take that $1,000, right? Because we still got part of that left. We're only committing $166. And I already know that I'm going to have 5/6 of that account sitting in cash for the next trade, right? So if I took $1,000 and I subtract that 166.67, I have $833.33 left for the next trade. So you can roll a couple of these at a time. I wouldn't do any more than like 2 or 3 personally because it's a lot to keep track of. But if you wanted to, maybe you take one trade that's 6% risk. The other one's 4% risk. The other one is, let's say, is to take another 6%, right? Let's just say we got those 3 trades, okay? If we took all 3 of those trades, right? This is 1/6, this is 1/4, and this is 1/6, okay? So you've got, yeah, okay. So this is kind of your bread and butter. Now obviously we'll do a little bit more elementary math, sorry. We're gonna do the least common denominator here. So we got 2/12, 3/12, and then we've got 2/12 again. So that is 6/12, which is, or I'm sorry, 7/12, which means we got just under half the portfolio here sitting in cash still with those 3 trades in the mix. Okay. Now I know I'm kind of going off on a tangent here, but if we have 3 trades, the cool part here is that each of these 3 trades has the same exact outcome in that they're going to result in a 1% overall loss or a 3% overall profit if we're using a 1-to-3 ratio. So by the resolution of these trades, we have a fixed outcome, right? We've either got 3% down overall, we've got 9% overall up or slightly over, right? Because of compounding. Or we've got somewhere in between based on these 3 outcomes, 3 trades, right? And that's pretty cool because we could take them all at the same time. So if you're looking to be super efficient and your risk ranges are a little bit bigger than 1% or 0.5%, like if you're not just scalping and things like that, there's an easy way to do that and get some bigger profits. Because a lot of people, when they see the 1% rule, they think, oh, I can only take 1 trade at a time. It's going to take forever. I'll never make a bunch of money if I'm only making 3% on a trade, right? Or 2%. But that's not the case because you can roll 2 or 3 of these at a time without big commitments on relatively small risk ranges, because 4%, 6% are still pretty acceptable for swing trades. And instead of taking a 3% profit on a healthy setup, you're then taking a potentially 9% profit. So you're tripling what you'd normally take in that one period of time, which could be, a week or 2, right? Depending on your trade setup. And you're still limiting your losses. You're only going to lose 3%. So if you full ported into any of these, you would have automatically lost more than 3%. So the 1% rule seems like it makes a little bit more sense. Now, I can't tell you guys what to do, and I can't force you to implement that stuff, but I can put it in front of you and walk you through it and kind of show you the benefits. And then if they make sense to you, you guys can practice and we can practice together. But I don't want to turn this into a 1% rule stream either. I'm sure some of you guys' eyes are glossed over because it's math, and I get that. But I hope you guys can see the main message here, in that this is a super valuable strategy, and it's position sizing. That's just as important, if not more important, than your position placement. JWAG, let's find another scalp. All right. Yeah, Charlie, don't full port anything unless you're Pookie. Fire says, I know this is a bit out of topic. What do you think about moving stop loss a bit higher when taking bigger swings? Okay, so that is something that I actually taught quite a bit. So let me just find a good clean chart here, and I'll come back to the 1 minute here, and we'll see if something's got volume that we can look at. All right, so there's a very basic strategy that I used to teach, and I still teach it. We really focus on it more in lifetime. And I don't see any entries on here, but basically let's assume that you got in on an engulfing candle like right here, right? Very easy strategy, just simple shapes and colors. I go over it a million times. 1-to-3 take profit ratio. So if this is our approach, right? This is our entry, this is our take profit. Our initial take profit would be here. And I only move stop losses up if I plan to scale out of a trade, because if I'm in a trade and I intend to fully exit in one of my, at one of these boxes, right? Then I don't really want to move my stop loss up, because that means that I'm deviating from my original plan and I no longer accept the stop loss that I did. So it's just not something I personally like to do. But if I'm scaling out, then absolutely. So what I like to do in a situation like this is I take that initial profit, that initial target, and I lock 75% of my shares. That's to guarantee me a net profit, because the remaining 25% shares not only has to go back down to break even at that point, but it's got to go 3 times lower than the stop loss in order for me to give those profits back. So securing those guaranteed profits at the first take profit with the majority of the shares is critical. And then anything beyond that, there's 1 or 2 strategies. And actually, let me see if I could pull that up here. Actually, it's not going to let me do this. All right. I think it's on this one. Sorry, give me 1 second, guys. My thing is, oh, there we go. Perfect. All right. So I've already got a flowchart for this. So predetermined, the first take profit where I sell 75% at once. Okay. And again, I just explained why. Then the next portion of the trade, the portion of the take profit, comes in one of two forms. And you're always going to see this or some variation of it, right? There's a 5 candle series where each candle for more than 5 candles in a row forms a higher low from candle to candle. And we can see that over here. We've got 1, 2, 3, 4, 5, 6 candles in a row with higher lows. So right here, as soon as this breaks down, I would lock another partial profit. And that's just where I sell most of whatever shares are left. Okay. And then we got 1, 2, 3, 4, 5. And then I got another opportunity to do that same thing right there. And I sell the majority of whatever's left. Okay. And all the while, I'm watching these impulses go up and down. And eventually we're going to come into a pattern like this, where if this candle closes above this low, I'll show you. But it should look like this. We should see 2 candles to the left and 2 candles to the right, which fail to challenge the low right here. So let me change this line to red. I'll make it big and fat so it represents our stop loss. But let's assume that this candle here closes and it doesn't, like the low of this candle doesn't punch below this guy. If that closed like right now, I would move the stop loss up right there because that shows me I have a higher validated low. And that says, okay, well, the price has had an opportunity to push back down here and it was rejected back to the upside. So it shouldn't be coming back down again. Okay. It's already had the chance and it failed to do that. It wants to keep going up. So that's where I put my stop loss, because after it comes back down and pushes below that, there's no justification for me to be in that trade. Okay. This one is just catching an impulse. It's just saying, okay, price is blasting with strength. Once that strength kind of weakens, yeah, I'll lock in most of my shares to capture that move, right? And that's all it is. So in this case, this actually moved below. So we didn't get that higher valued low. We didn't get the V shape, right? And there's no pressure to move this up because we've already locked profits here, here, and here, right? So don't feel like you're losing anything if the price doesn't form a higher valued low, like right up here at the top. Does that make sense? Yeah, pretty straightforward, right? Because again, all the pressure's off. If you're focused on locking in a profit, that pressure dissipates as soon as you take this initial take profit. And the remaining shares should feel pretty insignificant. So there should be no stress up here or here. It's just shapes and colors. And you are literally just pushing buttons when it's time to push a button. You shouldn't have a whole bunch of emotions or thoughts going on. Now you're going to, because that's how your brain is. That's how everyone's brain is. And that's okay. That's why we're here. But it shouldn't be in the end result, right? As you get practice, as you get some education, some experience, that should all dissipate pretty solidly, you know. So let me catch up on the chat here. Defcon BBAI is beautiful. Let me check. We like this one. We traded this. Oh yes, that's nice. So this is another perfect example. You see how many series of 5 candle runs and higher valued lows we got? So right here, if we look very closely at this candle, you can see there are 2 candles to the right and 2 candles to the left, which don't challenge the low of this little red candle. Okay, so that's a higher validated low. We got another example right here. This is a higher validated low. There's not 2 candles to the left, 2 candles to the right or more, which break below this low. So this is a higher validated low. This one here as well. Now these two are equal, so I always go for the second one, the last one in the series. But same thing, right? We got 2 candles to the left, 2 candles to the right. They don't break the low. Got one right here. Again, this is kind of a gray area here. It's equal or greater than. This one does not, because this candle here breaks below this low. See? So we can't use that as a higher valued low. This one is, and it's nice and clean. This one is a nice little 5 candle run. You got 1, 2, 3, 4, 5 candles with higher lows. So if you draw a line from candle to candle here, from the low to the low, you can see that they are all higher. There's a positive slope. So yeah, I think that was a great find. Thank you, Deathgun. Appreciate that. And yeah, I mean, so if your approach is to use just small engulfs when the price is going upwards with some strength, and you know you got your 3% take profit. Let me just erase all these other lines here so we can focus on this. You got your stop loss. I'll make that red. You got your initial take profit right here. Okay. And your entry, obviously. So this is where we take most of the profits. This is where we guarantee ourselves a net profit. Then we've got 1, 2, 3, 4, 5 candles so far. So we put a partial stop loss in place for, again, most of what's left. And then we can just watch this go up and we can capture this impulse. This is a great example. I don't know if you're in it or if you use that strategy or not, but that's a beautiful example. You guys are getting a lot of juice today. So I hope you're all taking notes. And I also hope you understand how little I focus on actually trading, because I just want to get in and out. I don't want that to consume my day. I would much rather spend that time, focused on stuff outside of the trades, which is what I want all of you to do as well. I just want you to treat this like a side hustle. Don't let it consume your life. If you're spending more than an hour looking at charts, you are wasting time and you are probably going to hurt yourself. So I know it's a hard pill to swallow, but you're trading to trade less, not more. And, I always say it all the time. It's like, I don't like hanging out at my job after my shift is over because I'm not getting paid. In fact, a lot of times you end up paying, right? I'd rather just live my life outside. You got to find a good balance in life. Don't just commit and become a slave to the charts. It doesn't work. Just find your edge and exploit the hell out of it. So in this case, this one just broke below this red line. So this would be a second take profit. Does that make sense? Because we're just looking to capture that impulse. That impulse is now over. Doesn't mean it won't go higher, but it means that specific impulse is now showing weakness. Therefore, it's time for us to lock some of those profits. Yeah, death gun psychology, just focus on that. The shapes and colors part's easy. I literally just showed you guys. Just flip this upside down for your entries. Bam, bam, boom, done. Right? Getting out is the hard part. Staying in when it's time to stay in is the hard part. And mostly just getting out of your own way. That's always the hard part. And once you understand that your brain is just hardwired in a very specific way because of specific pieces that are in the brain that work very well outside of the market, it just doesn't interface with the market because of all the uncertainty and how our brain relies on uncertainty. It's a literal, like, it's just neuroscience. Like it's just how we work. Yeah, exactly. Nobody reads the manual, right? We don't know what kind of features or bugs there are because we don't read the manual. Once you figure out like how the machine works and what drives it, you can exploit it. And it's pretty cool. Another one of your trades isn't filling. What are you trying to get filled on? Hope it's not BBAI because it's got a big red candle in it. Bam, bam, bam. Oh, XXI. Yeah, I like that one. That is a nice one. Let's see what the volume's doing. Oh, yeah, that's nice. That's a nice one. Now, we don't have access to anything that's going to happen over here, right? We're completely blind, even to this down here, right? We don't know what's going to happen. We don't know if the price is going to push up into here, if it's going to go sideways over into here, or if it's going to fall down into here, right? All we can do is make a plan, right? Have you guys seen the movie Next with Nicolas Cage? It's a terrible movie, but have you seen it? It's one of his 6,000 movies. I always like to use this as an example because it just fits really well. This stream is not sponsored by Nicolas Cage, and I hope he's not in the chat. So, stop watching his drone. Yeah, I mean, it's an old one. It got a lot of promotion. So I know it was one of the popular ones, but it's now gone in 60 seconds. But so basically in that movie, he has the ability to see like 10 seconds into the future. Okay, kind of like a Jedi power. And what that allows him to do is kind of get ahead of things like, conversations. If someone's going to say something or do something, like I think there's a scene where he's in a diner and someone comes in to rob the place and he stops it or something. I can't remember exactly what it was, but he's able to do stuff. Like he goes into the casino and avoids a bunch of people that are looking to hunt him down, right? Because he knows where they're going to be. So he just like turns or bends over or does something weird. So in the final scene, or one of the final scenes of the movie, he's trying to stop this big nuke from going off and he's getting shot at and he just keeps moving forward. And basically they visualize it weird. But basically, it's just a bunch of versions of him just walking forward and getting shot. And then he just keeps walking. And he's like the end result of all those alternate outcomes, just not actually being the one that shoots him, which you're not gonna be able to do that in real life, even if you have that ability. But so that's the idea though with trading, is that you're letting yourself look into the future at what possibilities could happen. And then you're just following the one that actually happens and protecting yourself. So you're just making sure you don't get shot. Okay. So if your plan is to look at this candle here for a break. Oops. Okay. And your plan was to wait for a break over here before you get in on this candle, right? And then you knew that that gives you a defined risk range, therefore a defined profit range. Uh-oh, you can't hear me? Can anybody hear me? Hit your hand, that's funny. Uh-oh. That's not good. Yeah, Nikki broke it. Dang it, Nikki. You had one job. Yeah, try to reset your Discord if you can. Just hit Control R, it'll reset the whole thing. It'll log you out, log you back in. Oh, I'm talking to people that can't hear me. Okay, it's fine now. All right. Well, welcome back. All right. So basically that's the job, right? So if your plan is to watch this specific candle and you don't have access to that next candle, right? You just have access to this in the moment. If your job is to use this risk range for a defined take profit range, and you've got an entry criteria, which requires you to wait until the price breaks over this threshold, you know one of two things is going to happen. There's two different outcomes that are created at that point in time. It's either going to break over or it's not, right? If it breaks over, you take action. And then if you take that action, you're obligated to take one of two more actions in the future. But the action is the same. You're just doing it in two different spots, two different outcomes, right? So it's a very Boolean process. It's a very cause and effect driven process. You're trying to find Control R on your phone. Does that concept make sense? Like if we use this range, for example, same exact thing, right? If we're watching any red candle and we just want to trade a color change, just a very simple concept. And let's just say we use a 1 to 2. Okay. If that's our goal, we know that we're not doing squat until the price breaks over this threshold, this specific threshold. And at that point we do, right? So you've got two versions of yourself. One gets shot, the other one walks forward. You just take that one step forward, right? And then you've got two more versions of you. This one down here gets shot. It just ceases to exist if it goes up, and vice versa if it goes down. And the other one takes a step forward and takes an action, right? And that's all you're doing. You're just playing this big game of if and then, and it's if then that, right? It's not a what if, it's what is. And you're just following whichever one happens to happen, right? That's all you do. That's all trading is. It's not guess and hope. It's not I control the market, I make the price go up or down, or I drew a line, therefore it has to go up or down. Your job is to protect yourself and to focus on your actions, your cause and effect, which result in you getting into trades and out of trades. Why would you use the red candle's body rather than the thin one's wicks? It's just preference. So basically just because of what it represents. So this is just a bearish last point of control. And they had an opportunity to push the price down, and the price closed lower. Therefore, the bulls were, I'm sorry, the bears, quote unquote, were in control of that candle, and then it reversed and exceeded where they started from. So it's just a demonstration of bullish power because they were able to conquer the last stronghold of the bears. So it's not like that's not actually what's happening in the market. I just explain it that way so you guys kind of internalize it a little easier. What actually moves the price is the order types and order matching on the bid and the ask. That every buy requires a sell and vice versa. There's no disproportionate number of buyers. It's a false narrative, but it helps people understand stuff. So it's actually quite a bit more complicated. But for the sake of this stream and the simple education, we just kind of say, oh, the bulls are stepping in, right? Yeah, so hopefully that makes sense. I do have to jump off of here. I don't want to ramble too much. Does anybody have any questions before I go? I give you about another minute or two. If you have a question and you can't type it all out now, just put a dot in the chat just so I know, and then I won't leave until you guys ask your question, unless it's Duco. When again? Like, when do I stream again? So what's up, Duco? So I stream Tuesday, Thursday mornings, but that's going to change. Secret's coming next week. Make sure you guys are here next Thursday. Market open. Make sure you guys are here. It's a free live stream. You lose nothing. Don't copy trade. Don't quit your job. Just show up to the stream Thursday morning, and we get a little surprise for you. So I trade Tuesday and Thursday in the free side up until next week. Then I just trade on Tuesday. I also have my Rags to Riches stream on Friday in free. So that one's not recorded, so you just got to be there in the moment. That's for the Rags to Riches team. And then in premium, I trade on Monday and Friday at market open, and I trade on Monday and lifetime. I hope you're writing all this down. And then I trade, Lee, Mad Maverick trades on Wednesday mornings at market open. Sleepy Pop, how many red days do you have in a month usually? This month I've only had 3, but that's because the red days were pretty significant. That's why this account's red, and that's because I took a more aggressive risk twice, and both times it just didn't work out for me. But if I, going forward, I'm not doing that anymore. We're just going to do this one specific strategy, and it's going to be fun. So if you're interested, let me also put the watch list. I'll put this link here. This has, and it's pinned in the watch list channel as well. I update it every Sunday night. That's got the schedule for the live streams. I don't know what is going on with this site. I'm sorry, guys. It's like there's some sort of plugin update or something. It's messing it up. But this has the schedule. I'll just put it here in the chat, in the Discord. That is our live stream schedule for every week. And yeah, it'll be fun. So make sure you guys are there. And, I stream free no matter what. And then next week we had a little surprise, so I won't be here Thursday. And then in premium, I do the Monday and Friday. And then lifetime, I do that extra stream on Monday. And, lifetime is a little bit less accessible for a lot of people. There's a bigger price tag attached to that one, which is why I usually recommend just going for a coach, because they also have dedicated live streams, and they, they'll help you solidify that foundation and build a trading plan out when you're ready. There's no pressure, but getting into the coaching program is much more efficient, I would say, than trying to figure it out. And kind of basically, if you're going to lose more than $40 next month, it makes sense to get a coach, in my opinion, because then you get value from that $40. But that's your decision. So how many live trading sessions a week are there dedicated to lifetime members? So lifetime gets access to everything. So it's like 22, 23, 24. I don't know. It's a lot. They get access to all the coaches. They get access to all the indicators. They get the rest and retire. They get the crypto access. They get all the stuff. That's kind of why it's up there. They're typically members that have been with us for a long time. Although we just had somebody join yesterday, Mr. David Day there. It's amazing. He was there for like a month and he jumped in. So I love seeing that. I hope that means we're doing the right thing in terms of what we offer people. Yeah, I think there's probably like 20. There's 20 plus. I just can't remember exactly off the top of my head. How much wood could a woodchuck chuck if a woodchuck could chuck wood? I thought there was going to be more tongue twister to that. Give me something hard, buddy. I'm just kidding. I understand these rules and concepts. I thrive with my wheels because they don't need my full attention. That's beautiful. So you're trading less and making more. With that being said, I miss copy trading and open because I can take trades without watching or looking at charts or anything. As much as my end goal is learning to do this all on my own, changed something. I also am trying to take trades without having to do any of that. So you're in lifetime. You're one of my students. We can do a little bit above and beyond. And you and I specifically talked on Tuesday. So if you're into that, I can put stuff in front of you, but I can't tell you to copy. But I can teach you my strategy and walk you through it in real time. So that's up to you. But yeah. But I don't want to do that in live, in the free channel. It's new traders. They don't have the same exposure. to the education and psychology stuff. So I don't want anyone to feel like they should be tempted to trade something that they're not familiar with, right? So you and I are going to work together a lot. You know, you're in Lifetime, I'm the coach in there, so we're going to coach you up. And then we'll get you to the point where you can look at charts and not have to think anyway. Like, this is literally just shapes and colors. So somebody give me a random ticker. Actually, no, I'll just use VLCN. Boop. All right. Guess what would have happened if I was watching VLCN? I see a red candle. I see a small risk. I see a 1-2 take profit. Boop. There we go. Would have been in and out if I was watching it and not rambling about psychology. That's all it takes. Just 1 or 2 of those a day. If my first trade's a win and I'm not Pookie and I'm not live streaming and my first trade hits my daily target for the day and I'm comfortable with that and know that it compounds efficiently, I could be done for the day in literally a matter of minutes. And, you know, this went up 1 to 3, 1 to 4, whatever. But this can all be established with brackets. So if I see my criteria, I can literally come over here and I can set a buy stop order and I can establish a take profit and a stop loss, right? And I can place the buy stop order 1 cent above 27.94 if I'm watching this chart. And I could say, okay, well, I want my stop loss to be at 27.03 and I want my take profit to be 29.80. And then I can just push the button at any time. And then if it wants to, you know, break over that level, I can. And if it doesn't, I can set an alarm, you know, for 27.03 or whatever. And then that just tells me to come back to the chart. Otherwise, I can go enjoy my day without staring at the chart, because I understand all the tools that I have at my disposal and how I can work with them. I can completely automate the entry and the exits on that if the price does what I need it to. And if it doesn't, I would have planned for that as well. And that alarm will tell me to come over here and cancel my buy stop or modify it. So it's entirely up to you. I mean, we can work on that and we can template all this stuff out. It's pretty easy once you figure it out and once you get some practice. But it's not easy now, right? So we can work on that. I do have to jump off here though. So let me just catch up on the chat one more time. Deathgun, what happened? Did you miss the trading luck? Well, let's get luck out of the equation, buddy. Were you trying to get entered on VLCN or a different stock? I see Porter wants us to look at bull. It's coming down, buddy. Beautiful 5 candle setup. But exactly, Charlie. Our goal is to eliminate uncertainty as much as possible and to make everything as Boolean as possible and cause and effect driven, not hope and effect, right? Because that's how we hurt ourselves. Here's a perfect example, real time on bull. We got a 5 candle setup. Let's draw it out really fast. Okay. We got our levels here, level there. There's the entry. Do I need to look at this anymore, or can I set an order and walk away? I would have already accepted the 2 outcomes, right? And I know I need to check back by the end of the day, obviously. But I, in theory, could just set this and walk away, right? Because what does it do if I just continue to stare at this? I'm just giving myself more data for that little drug seeker in my brain to convince me that I was wrong and that I need to get out of this trade. So if I cut his supply off and I focus on other things and I give him dopamine doing other things, he's less likely to be able to derail this trade, right? So I need to trust my setup. I need to trust my edge, not myself, because I'm very bad at that. So, all right. Okay, so let me check. Okay, I should have known better, but I saw my setup. That was on BBAI. Okay, let's check BBAI. It looks like it's pulling down, buddy. Should know better, but I saw my setup. Are you doing like a moving average bounce or something? Because all these candles here, from here to here, every single one of these candles has a lower high. That's a bearish impulse, right? We can look for a break of that. But if we're entering on wicks or trying to time the bottom, it's probably not going to work out most of the time. Okay, yeah, walk away unless you want to move the stop loss. It's better too because of emotions. Yeah, that's you just if you don't have information, you can't use that information to derail yourself. You know. Duco says that was a successful trade. Look for your criteria, enter, and either hit a stop loss or take profit. Yeah, why get upset at yourself? You're not upset with yourself, and it's okay if there's emotions and thoughts in there, even if it's just frustration or disappointment. Those are very valid emotions. We just have to study where they're coming from. And a lot of that just boils down to the anterior cingulate cortex. And that is the part of your brain that weighs comparisons and expectations. So if your brain is looking at something and it sees something, it recognizes, that's a specific concept in neuroscience, it forms an expectation because it's going to reach into the hippocampus and it's going to say, hey, library of references and experiences, what can we compare this to? What is it? What do we recognize it as, right? Hippocampus is going to go into its little library and retrieve that and be like, here you go, buddy, this is what I got. And the amygdala may or may not have an emotional tag attached to that. And then the ACC is going to take that information and say, okay, we have an expectation. Let's keep watching this and make sure it matches what we're expecting. And when it doesn't, that little drama queen in your brain just panics and spews panic signals everywhere, right? And that just messes everything up. And then eventually, if that's strong enough, if there's enough chaos in the room, the amygdala wakes up and it's like, everybody shut up, I'm trying to sleep. And it gets angry and it feels like it needs to protect you, right? It feels like you're in danger. So it goes into protector mode, and that's where we resolve things through violence and impulse. And that's where things go bad for your trading. And, our goal is to short circuit that conversation early before it even gets down to the amygdala or even the ACC. We just need to feed our hippocampus healthier things to reference. And then when it's time to set those expectations, it already has a healthier structure to work with. Does that make sense? You don't need to know all the specific parts of the brain. Just know that they exist and they're part of everyone's brain. And they have a specific function because those same parts of the brain function very well outside the market because they're good at filtering out things and eliminating things, sometimes with violence and impulse, that are uncertain, right? We like certainty. We like no stress. We like baseline. So once we start deviating from that, we become very efficient at doing things that put us at the top of the food chain, which is killing everything else first, right? We are not good at surviving in the wild. We're not good at enduring weather. We're not good at defending ourselves. We're just good at killing other stuff first because we're so impulsive, and that works against us as a species in the market. Charlie, thank you very much. Got to run for the day. Well, I'm glad you're here. I actually have to run too. I know I'm like almost 15 minutes past the time I said I had to go. So I appreciate it. Let me end the recording and the live stream. Thank you all who are watching that. Let me put we got a free trial. Let me put that link in there for anyone that's watching. I'll put it in the Discord here as well for all you free members if you haven't already grabbed it. It's a 5-day free trial, completely free. You get access to the coaching live streams, not the education channel where it's recorded and stuff, not the documents and not the chat. And that's just so we don't disrupt the people that are paying. But you get access to the live streams and you can hang out in there. You also get access to the Monday and Friday live streams. Lee does swing trading. Bull does spread trading. There's a bunch of extra streams in premium. So let me end that recording. We open it every Monday and it goes through Friday.